Hello again, fellow BeachBum traders. Welcome to part 2 of our weekly trading game plan for the trading week of August 29th through September 2nd. And again, in part 2, we will use our market analysis, etc. data that we gathered yesterday in part 1 of our weekly trading game plan for this week to select the individual stocks, ETFs, etc. to put in our watch list to look to buy and at what prices, and also what are we going to put in our bullpen to consider on a daily basis. Good morning, DS Greg. Glad to see you. Thank you for joining us. So we'll go ahead and get started. So here's the notes document for our weekly trading game plan for part 2. Our notes can be found in a Google Drive, public Google Drive folder, and you can find the link to this public Google Drive folder in the description box below. And we'll also put the updated link when we finish in the comments below. So again, here's all the notes. It has links to all the tools we're using, etc. Also, if you haven't already seen part 1 of the weekly trading game plan for this week called Fallout from the Jackson Hole Symposium, we would highly recommend that you view that video, as that contains all of our market analysis that we did yesterday. And we talked about strategies for how to make money and benefit from any fallout from the Jackson Hole Symposium, as well as other trading strategies we're going to employ to select our stocks for this week. Just a quick reminder, none of this is financial advice. We're not financial advisors. This is for educational and entertainment, hopefully, purposes only. Good morning, Walter. Thank you for joining us. Good morning, Lord Byron. Thank you also for joining us. Glad to see you're both here. So let's dig in first. We'll talk about some of our trade updates for this week. And the first one we'll talk about is our initiation of a position in GDXU, which is a leveraged ETF on small microsectors gold miners. We added this to the bullpen. Our Patreons got alerted. We added it to our bullpen on the 25th. Then we moved it up, put it in the game on the 26th because it looked attractive. They were pushing gold down. Our ETF spreadsheet said there was a good risk-reward profile on GDXU, and we'll look at that in a little while as well. And so I put a order in at 353, and I'll show you that in Webull. We'll jump over back and forth to Webull to analyze these trades, as I got some positive feedback that people seem to find that beneficial. So what I did is, let's see, when did I put that order? I put it in on the 26th, right before I went to the beach. We'll talk about that strategy in a little while as well. So, I saw it was coming down. It looked like initially I wanted it about 348. There was kind of a support there. Then they were moving the price up. I was watching level 2. Looked like there was a support level at 352. So I went ahead and I put the order in at 353 and went to the beach. And it hit on the 26th. You can see it dipped a little below that, hit, and then has gone up since then. So, we'll employ our typical strategy as it goes up through these support levels. Hopefully, gold recovers and it goes up in the near term. And we will start placing a stop underneath it, at least one support level behind. You can see that pretty dramatic decline with the market dump on Friday. It made a dramatic decline and became very attractive. We'll look at the risk-reward profile in our ETF spreadsheet as well. So we're long GDXU, pretty decent size. So cold, as you know, we've been scalping cold. Cold is the short on natural gas. Natural gas has been very volatile. We talked about this also yesterday. The inverse to go long in natural gas is called boil. And there's a lot of scalping opportunities, short swing opportunities in natural gas and the energy sector. I know some of our other fellow BeachBum traders, I believe Walter's been scalping with cold very effectively, making some good money as well, possibly some other of our fellow BeachBum traders. So I'll show you this trade. We went in, our latest scalp was, we went in on 822 at 971. and then we got stopped out on the 24th at 1017. ROI on that was about 4.7%, or monthly equivalent about 71%. So again, congratulations to all our fellow BeachBum traders who profited from this and or other scalps on cold. Again, an ongoing opportunity to make money scalping natural gas. If you want to play the long side, you can play boil. We prefer the short side, so we've been scalping with cold. So we'll look at this one. You can see I got in on this dip. I had a pre-existing order sitting there at 971. When it dipped, it caught that order on the 22nd. And then when it recovered, we started moving stops up. And then, staying a support level underneath it. Eventually on the 24th, when it rolled over and broke through that pivot point, we got stopped out and made our nice profit. You can see it's kind of bounced since then. We didn't catch that one on Friday. I don't know if Walter or other people caught that bounce on Friday, but you can see there's plenty of opportunities. I've got an order now sitting out at 902. I think it's at 902, might be 903. I typically would maybe go a penny above that, but I'm pretty sure I have an order sitting there right now, just in case they were going to spike it down on Friday. I wanted to catch that even if I wasn't here. ULE, we talked about the dollar strength. We talked about this for a couple of weeks. ULE is an ETF on the US dollar to euro pair. So when the euro went below parity with the dollar, this goes to around $10. So we took that position when the euro broke parity with the dollar. We went long ULE. Again, you can see our strategy and more discussion on ULE last week's weekly trading game plan. But if we look at that trade, you could just see what date was that. I think I put that in before the weekend too, and then just let it ride. It hit on 822. So let's see, where's 822? So when it made that dip below 10, it caught my order. You could see we alerted our Patreons, etc. You might have been able to get in at a lower price. You can see ULE is very choppy. It's pretty kind of low float, chops around, doesn't really trade much in extended hours. So I put this in a Fidelity account where it's harder to trade extended hours, and I'm just going to let it ride. You can see it made this dramatic spike on Friday and then came back down. So again, it's very choppy. You want to be careful not to get stopped out prematurely because it does have wide bid-ask range and it will chop around. And again, the US dollar to euro is near parity still. We're waiting for it to swing back up. You can see if we go back quite some time, it's got 60% potential reward. It's never been below this 985 level in the past 5 years. The euro parity thing goes back 20 years. We talked about this yesterday, that when I hear something that's at a 20-year low, I see that as an opportunity. It's going to probably reverse. So we're going to hold that, ride it out. Hopefully it'll turn. How high it goes, we'll again move our stops up accordingly and see what we can get out of ULE. USOI is an ETN on oil, pays a monthly dividend. You'll see we got in on the 16th, which was just before its ex-dividend date. It went ex-dividend on August 19th, which meant we got to collect the monthly dividend for August. It pays like a 22 or 23% annual yield on that monthly dividend. So we get to collect that monthly dividend. Then we got stopped out on the 26th at 461, so we made an additional almost 2% ROI profit in price appreciation. So that gives us a monthly equivalent of about 5%. So we collect the monthly dividend, plus we get an extra 2%, plus we're going to play it again if it comes back down. So rinse and repeat. So this is swing trading, right? This is how we trade. We make money. on dividends. We make money on selling covered calls when appropriate, and we make money on price appreciation. So you can see here on the 16th, we bought when it made that dip to 453. And then we rode this out, got the dividend. So we weren't going to get stopped out before the 19th because we wanted to get that dividend. There's the price drop due to the going ex-dividend on the 19th. And then it bounced back up. When it rolled over, it hit our stop. You can see we had a stop at 461, just underneath that pivot point. So when it broke down there, we took our profit, and now it looks like it might turn down. So if it does, we'll play this again, rinse and repeat. So I hope that all helps. I hope these trade analysis help you kind of see how we trade. Again, we don't want people to blindly follow the way we trade. Find your own trading style, what works best for you, that you can be consistently profitable. But hopefully, you hearing our mindset and how we trade and make money will help you find your best trading styles and time frames to help you make money and help you succeed in your trading career, as that is our goal here. So. If you want to get real-time alerts when we make trades, you can join our Patreon. Any membership level in our Patreon, I post our alerts to our Patreon as soon as possible, and then they also get broadcast in this alerts channel in our Discord, and I can show you that real quickly. So our Patreon members have access to a couple alerts channels. I also have alert set in Thinkorswim, so you'll see this alert got triggered on GDXU and from Thinkorswim. It just got broadcast to the Thinkorswim channel. When I actually made the trade, then I will update that in this channel. If it's not based on a Thinkorswim alert, I may just post it to the trade alerts. And also when we get stopped out, I will post that both to our Patreons as an update and to the alerts channel. So again, if you want to get alerts of what we're trading, again, I'm not suggesting you blindly follow our trades, but you can get those alerts. Often our Patreons can get better prices than even I get, because I tend to wait for the price to exceed what we communicated to our Patreons before I put it out to other social media, to give you the opportunity take advantage of those trades as much as possible. So we hope that all helps. So I'll talk, if we have time, I'll talk more about lessons learned and some maybe some changes in how I plan to trade going forward. But I want to make sure we get through all the watch list updates, all the bullpens. I can answer questions. So I want to make sure we have time for all of that. So if you have questions, please post them in the chat. If you're watching this after the fact, please post them in the comments below or in our Discord. As you just saw, we utilize our Discord for a number of things. Our Discord is free to join, so we welcome you to join. We encourage you to join our Discord and communicate with all the other fellow BeachBum traders. We've got a lot of very nice, helpful traders. Our community is great. They help each other out, and we've got some really good traders in there. So join us. Okay, so we'll talk about our watch list. I'll spin through these here, and then we'll look at the charts in Webull. The first one, we talked yesterday that both gold and silver had been declined, both due to the dollar strength and just the overall market weakness recently. And another ETF that looks attractive, just like GDXU, but it's not quite to the support level I'd like to see, is AGQ. And again, we'll look at the risk-reward profile of this in our ETF spreadsheet in a few minutes. But you'll see I also added that to the bullpen on the 25th and then moved it up to our real-time watch list on the 26th. This looks like a very similar opportunity as the gold, GDXU, and silver tends to be even more volatile. So I think there's some good scalping short-term swing opportunities in silver using this guy. BVN is Peruvian miner. We've been watching for a while. It's still a little bit higher. It didn't come down with the pressure on gold, silver as much as I would like. We talked about coal, that we're going to continue to scalp this. I guess I need to update that as the new high in natural gas is over 10. So I'm waiting for an all-time high. So whatever that all-time high is, I think I even have, as I mentioned, I think I already have an order sitting in cold waiting for that spike again. LABD is the short on biotechs. That's another one we've been scalping the past couple weeks. Again, we talked yesterday about divergences we're seeing in semiconductors, biotech, and tech in general. So I think there's still, this one looks attractive, and we'll talk about the fact that I've got SOXS in there too, I believe, to further scalp biotech and semiconductors. So good morning, Specula. Glad to see you. Glad you were able to join us. So we talked about LABD. NGD is another gold miner. We added this to the watch list on the 22nd. As you'll see, it was approaching support. This is one we swung in the past, made money on in the past, and it looks like it's got a decent risk-reward profile. I took PBI off the watch list, and I updated this in our Discord on the 24th. It kind of broke down. It was making lower lows, didn't look stable. So we're going to take that one off and wait for it to stabilize. I still like the concept of the turnaround in Pitney Bowes, but it just needs to find a stable support and turn up before we pursue that. And it continues to be breaking down, making lower lows, etc. So SOXS, as we just discussed, is the short on semiconductors. Now, we talked about LABD. If you're day trading or scalping very short term, the long for biotechs, the leveraged ETF to long biotechs is LABU, LABU. Similarly, the way to long semiconductors is SOXL. So those pairs, if you're, again, day trading, short-term scalping, you can go either direction with those guys. Similarly, the short on the Qs, which is SQQQ, looks attractive. We kind of missed out that big, when the markets dumped on Friday, there was an opportunity in all three of those. I wasn't nimble enough. Maybe some of you were, as we had these on our watch list. But if you jumped on that Powell fallout from the Jackson Hole meeting, when Powell started talking, all the markets dumped. And if you were nimble and caught these, there was a nice profit to be had, particularly in those areas, because the yields went up. So it really hit the technology, the growth stocks, the hardest. We talked about that we're already long ULE. If you're not already, there's still an opportunity there. We talked about USO. We're going to watch for it to come back down, and we'll play that again. And then volatility, again, if we had this UVXY as the leveraged ETF, we like to go long on volatility. And if you played that and were nimble enough, the jump from like 20 to 25 pretty quickly as the fallout from the Jackson Hole Symposium. So I'll jump over to Webull, and we'll look at our watch list, look at the charts. Just a real quick reminder, if you're not already using Webull, they're still offering their 12 free stocks. If you open and fund an account, Webull's our favorite trading platform, as you'll see. It's what we use for the majority of our trades. So if you're not already using Webull, we recommend it. You can get 2 free stocks up to $300 each by just opening an account, and get an additional 4 to 10 by just funding an account with a penny, a dollar, whatever, each valued up to $3,000, and you can cash out your free stocks and keep the cash. And if you don't like the platform, so why not sign up, put $1 in, get 12 free, up to 12 free stocks, and if you like the platform, great. So again, that's what we use the majority. So okay, so another nice thing we like about Webull is you can see you can have all kinds of different watch lists. I have videos on how to create watch lists, how to maintain watch lists. So I'd recommend looking at those videos if you want to see how to create and maintain watch lists. I'm just going to spin through these charts real quickly so you can kind of see where our price targets are. And we'll talk about other ways you can get these price targets in a minute. So here's that AGQ, which is that leverage ETF on silver. You see it's starting to come down. I'd like it about, this 1933 area. We zoom out a bit, we can see, that's kind of a double touch support level. Here's BVN. As you can see, I'd kind of like it in the 514 area. It's still a little bit above that. It might be slowly coming down. So here's cold, and we just analyzed our trades on that. As you can see, the previous bottom was 902. Again, I watch the natural gas price to determine where to enter cold, because otherwise, if natural gas is pushing up, cold will keep coming down, and it does have a time decay aspect to it. So I just wait for natural gas to push up over 10 again, or peak and roll over, and that would be the opportunity to short natural gas using cold. Again, oil is the inverse of that. Here's LABD, which is the short on biotech. You see the big run up. It looked like it was coming down, looked like we might get an opportunity again. And then, it bounced hard on Friday with the fallout from Jackson Hole. So we'll see. Again, we talked yesterday that I would not be surprised to see a knee-jerk type reaction early this week where they just push the markets back up because the big red candle we saw on Friday was pretty dramatic. So if they push all those guys up, there's going to be opportunities to hop into these shorts, LABD, SOXS, and SQQQ. So that's kind of our strategy is if we get a pump in the tech stocks, if it's Monday or early next week or whatever, we're going to be jumping on these shorts because, again, we're still in a downtrending bear market. We saw yesterday where we're sitting in terms of the indices. So, again, I think there's opportunities more short than long in the near term. But, again, if you're scalping, day trading, etc., you can go both ways. You're just probably more nimble than I am. So here's that NGD, which is the other gold miner we're looking at. You can see it looks like it's kind of bottoming. There's a previous low. So we'll see. It's got a pretty decent range. Take that off. I like it around 67. And you can see it goes up to 2 or so. So there's a real nice risk reward profile in that guy. So that's the only reason. And again, strategy wise, we talked about the gold and silver. What I realized, we've got quite a few gold miners, silver miners. We've also got positions in GLDI, SLVO. If you want to get a monthly dividend payer on gold and silver, those are the ones we would recommend, GLDI, SLVO. But I realized I can also do some scalping. So using this AGQ and GDXU, since they're driving gold and silver prices down, I'm going to look at some scalping short-term swing opportunities as well in that area. So that's my rationale in those regards. So we talked about semiconductors. Again, they pumped that. They were pushing semiconductors up, even though NVIDIA, Micron, AMD, they all came out with poor guidance, said there's a glut, etc. But regardless, people were pushing them back up. So it looked like we were going to get another opportunity to scalp semiconductors short. And then Friday, with the fallout from Jackson Hole, it just bounced, the short bounce. So semiconductors, biotechs, all tech fell, as we can see also in SQQQ. So, and again, I'd like SQQQ down here, but if we get a quick knee-jerk down and then a reversal, and you're nimble, there's plenty of opportunities to make good money in those areas. So, talked about USOI. That's the monthly dividend-paying oil guy. I'd take it again at 353 or below. Again, their next ex-dividend date I would expect is going to be probably around September 19th. It's typically every month. So if you get in before September 19th or so, you'll get the September dividend. So, and again, we can play this over and over again and make money. So if you find this beneficial, please hit the like button. If you're not already subscribed to our BeachBum Trading community, we hope you will choose to subscribe and hit the bell icon to be notified. So when we do these live streams, we drop videos, educational videos during the week, due diligence, etc. You'll get notified. So let me see if there's any chat questions I'm missing. I see you guys are having great conversation. I greatly appreciate that and enjoy it. Great. You guys are helping each other out. That's what we want in our BeachBum Trading community. Also, just acknowledgement and an FYI for everyone in our community is Spacula, who's been a long-time great supporter of our BeachBum Trading community. It's been very helpful, both in our live chats and our Discord, is now a moderator in both our live chats and our Discord. So join me in thanking Spacula for all his help and support. And just so you're aware, kudos to him as now a moderator in both of our live chats and our Discord. So we also talked about volatility, UVXY. We saw that big pop. Again, we looked at the VIX yesterday. Unless we get some other fear causing catalyst, we would expect it to come back down. Again, I watch the VIX. I want to see the VIX below 20, ideally 18, 16 to go long UVXY. Probably should have gotten in right before Jackson Hole. That would have been a good move. I I missed out on a number of opportunities, not necessarily thinking that we would get there, that such a dramatic reaction, since pretty much everything he said we already knew. We've been talking about it for weeks. So again, I was a bit surprised that we got such a dramatic reaction based on his speech that just told us pretty much he's going to do what we've been expecting him to do. So just another quick update is I've been scrambling around this morning working on some further automation to also update. We have a web page that's available to our Patreons that's automatically updated daily. So at the end of the day, after I made my updates to our watch list and our bullpen now, we generate a web page and our Patreons have access to that web page. So today I added that updates to our bullpen are also included on that web page. So again, our Patreons have access to that, and it now includes both our regular watch list and our bullpens. So I won't be posting those daily changes to the stocks watch list channel so much, and I'll focus more on any intraday changes and additional information. So if you'd like to get daily updates to our watch list, any membership level in our Patreon has access to this channel and that daily updated web page. So just so you're aware. And again, if you have any requests for changes, improvements to all this process, please let me know. I'll do what I can. I'm trying to make it as efficient and effective for all of us in the community as possible. So here's changes to our bullpen, and then we'll look at the charts a little bit. DNN is a uranium play. We talked about uranium yesterday. They've kind of run it back up, so I'm waiting for those uranium plays to come down, and both DNN and UROY are some uranium plays. We've had the bullpen for a little bit, waiting for them to come down. And again, we talked about some of the divergences within the energy sector. So if they push uranium down again, like they did about a week or so ago, it might give us an opportunity to enter. Also, we're already long TMF, so we're taking that one out of the bullpen. So let's look at the bullpen stocks. It's real quick, short. So here's our bullpen. It's just DNN, which is uranium. They see it was coming down. I like it around 92. Anything under $1 is good. But then they ran it up towards the end of the week. Same thing with UROY. I like it down here, but they bounced it off that support level and ran it up. So again, if I make updates to the bullpen, that'll come out in that web page now on a daily basis. So now let me get our ETF spreadsheet open. And while that guy opens, I'll talk about just some additions, and then we'll scroll through it real quick. I'll see if we've got any questions in the chat that I should answer. See, you guys are communicating effectively. Love to see it. So one we've had in our database for a long time, I just didn't have it in the spreadsheet, was MJ, which is a cannabis, long on cannabis. I was getting alerts that it was reaching an attractive price level. So I wanted to get that in our spreadsheet so we can watch it. And then I did a search in the database, I believe, in the ETF database, and another cannabis play. I still don't have a short, but another one that's long cannabis is MSOS, but I don't believe its risk reward as attractive as MJ, but I put it in the spreadsheet so we can reference it. Also, I was looking at solar. They were driving, again, this divergence in the subsectors within energy is they were driving solar up and down, so I wanted to look for opportunities to scalp solar. So yeah, I see SPAC's question about the cats. I think you can probably hear my little boy in the background. Yep, that's him. He's off treasure hunting playing. So if you hear him squawking, he can get quite loud, and I'll apologize if that's disruptive. But a lot of times when he hears me doing videos or on live streams, yeah, you can hear him. Then he decides that's time for him to treasure hunt. So two solar plays. Again, I think tan is probably the most attractive, and we'll see that as well. So I'll jump over to the spreadsheet in a second. And just an FYI, if you've watched some of the previous live streams where we went over the ETF spreadsheet, I've resequenced the columns, and I'm doing some work in that area too to try to make it quicker to identify those that are attractive. So I'll show you. Again, I'm trying to make it quicker and easier to identify those that have an attractive risk reward opportunity, both for myself and hopefully for you as well. So let me see if there's any other questions. I'll grab a drink, and then we'll spin through our ETFs. Okay, so in terms of formatting, as you'll see, I shrink it down a little bit. That should be okay. Is what I did is, because the most important ones are the current price, current risk reward profile, and then the near-term support resistance. So this is the nearest support to the current price and the nearest resistance to the current price. And then what's the risk-reward ratio for from that support to that resistance. And the green cells, again, are risk-reward that's 2 or greater, which is what I'm looking for, is a risk-reward profile 2 or greater. So these 2 are the most important. This is the 52-week, same thing, from the 52-week low to high, and then also from the bottom to the top. So, 4 green says, hey, this is really attractive, and it's got plenty of room to run. So you can see it's telling you that ARK is attractive right now. Now, I'm also going to look at these lows, and the support. How far away is it from support? And I would say no on ARK because it's got farther to fall. And we know from the macro pressures, there's a lot of pressure on growth tech. So even though those are green, I would say, nope, not interested. Sorry. LABD, we know we're playing biotech short, but again, you can see there's an opportunity there. So again, you can use this. This is accessible to our Patreon members. Also, any level in our Patreon has access to this spreadsheet anytime you want. And as you can see, I add to it as I find things that might be interesting. And the 52-week low and high and the current price are updated using these Google Finance functions. And then the other prices are updated end of day by some other automation that I have that comes out of my database. So the support resistance and the bottom top are only updated on a daily basis out of my database. So here's MJ, and like I said, it's, it was looking kind of attractive, but overall support to resistance isn't that great. 52 weeks, okay. So, keeping an eye on it, but this other one, this MSOS, isn't nearly as attractive currently, although it does have a 52-week that's a little bit better. So right now, the ones in yellow I do not have in my database, so the support resistance and bottoms and tops will not automatically get updated. I have to update those manually, which is why I currently have them in yellow. So similarly, you can see here's another one you can short China with that someone was interested in. It's not my database, but I wanted to compare it to Yang. So you can see I don't find that one as attractive as Yang. I would use Yang to short China. And you heard on that audit news, they're supposedly going to allow the U.S. to audit their public companies. And so they ran China up. So we might get an opportunity again. I don't have Yang on my watch list because, as you can see, currently it's a little bit higher above support than I would like. But if they drive it down, we'll add it to the watch list and we'll try to short China again. Okay, so Lord Byron likes MSOS. So again, you can see it there. So let me know if there's a particular category you want to see. We'll look at probably silver and gold. But see, now I can quickly scroll down through here. I can look at, okay, who's got 2 greens? There's Yang. We just talked about. I've been watching this guy on dry bulk, but it keeps trending down. So when that stabilizes, I'm going to be interested in that guy too because it has an attractive risk-reward profile. Here's all the energy guys. Here's ULE, so you can see it was green. It's, it doesn't have a huge range, so, and it's a slow mover, choppy mover. But I just thought that Euro parity thing was an opportunity. I've been looking at this guy. This is the FTSE on Europe. If it comes down, that might be attractive. Here's GDXU, so you can see why that's attractive. It came down to a very low level for its history. It's got a very nice 52-week risk reward of 2.5, and huge short term. So you can see why I like GDXU. We're going to see something similar in silver. Here's SQQQ. So you can see why I like that. You can see where the support level is. There's cold. If you want to short oil, here's a couple ways to short oil. Drip, SCO to short. Gush, UCO to long, but you can see Gush isn't terribly attractive. UCO is. USOI, you can see currently it's pretty attractive. It doesn't have a lot of range, but it pays a monthly dividend. You can see the short on the Russell's it's showing up pretty attractive, but it's quite a bit of ways from its 52-week low and support level. So it's got a ways to fall. So that's why I'm not. So here's AGQ that's on our watch list. You can see it's got a very attractive current risk reward. Support to resistance is nice. 52-week is nice. So you can see why I'd like that. The 2051 is the latest price. It's got a little bit to come down. So if that comes down, we like it. We're already long SLVO. You can see these small cap guys are both. So there's, scalping opportunities there. And then UVXY we talked about, which is the long and volatility. So let me check for questions. If you guys have any questions, please post them in the chat. If you want to see anything else in the ETF spreadsheet, again, always available to our Patreon members. So shopping list stocks, we're continuing our series on recession proofing and inflation proofing your portfolio. I should have noted that this is currently unlisted. Part 2 is done. It's currently unlisted, but as a bonus for watching this weekly trading game plan, if you can access this via the notes. Again, this is part 2 in the series. Working on the subsequent parts to that series on recession proofing and inflation proofing your portfolio. So if you guys need help with spreadsheets, hit me up in the Discord. Probably ideally the Discord. Spreadsheets, databases. I won't bore you with my history, but I'm a data guy from way back. So that's what I would recommend. Again, we've been saying this for a long time. Make sure your shopping list, make sure your portfolio is recession-proof, inflation-proof, and prepared to be going in a rising interest rate environment, which we're already in. And we talked yesterday that we're going to be in a rising interest rate environment for some period of time, and those interest rates are going to stay high for longer than some people would like or had anticipated. So again, make sure your portfolio and your stock picks fit those criteria. So the only other things I'd talk about some trade ideas. I want to answer that question real quick, and then we'll wrap pretty quick. This was what led me to getting long in GDXU. Again, I was, even though we were already long quite a bit of gold, silver, miners, GLDI, and SLVO. I think there's scalping and short-term swing opportunities using these ETFs as well. So we kind of talked about that. Haven't seen an Art of Mingo in the chat today, but last week's weekly trading game plan, he asked about this company called Nobu Mond Graphite, and it's a Canadian graphite company. They're pretty interesting. So again, as another bonus for watching this weekly trading game plan, I did do a due diligence video on Nobu Mond Graphite, and you can get access to that video through this link in the notes. So if you're interested in my due diligence, my initial due diligence and conclusions relative to Novumon graphite, you can go watch that due diligence video. Similarly, if anybody has any requests for due diligence on a stock, you can put it in the comments below. You can, put it in the Discord, tag me on Discord, say, hey, I'd like to see a due diligence on these stocks, and we'll accommodate those as we're able to. And Tanvir, welcome. Good morning. If I didn't welcome you before, you're saying, does rising interest rates help TLT? Well, not really, because TLT is long on the price of treasuries, and higher interest rates would tend to equate to higher yield, which would tend to equate to lower prices in bonds. So that specifically is not a positive factor for bonds. However, risk off, the traditional risk off move is sell stocks, buy bonds, right? So when you have increasing fear in general, also recessionary factors, people tend to go towards bonds. So fear of recession, etc. They'll have a tendency to buy bonds, which then would be a tailwind for TLT or really any of the treasuries. Again, we're long TMF, so that's kind of a short-term scalp play based on that risk-off move, that if they drive the bond price up due to a risk-off move, due to the bear market or fears of recession, we'll take a nice scalp in the 20-plus year treasuries using TMF, or as you're using TLT. So we talked about this last week, and why I prefer TMF to TLT is just the risk-reward profile. So there's TMF, there's TLT. Right now, actually, short-term TLT looks better. 52-week TMF is a little bit better. Support to resistance TMF is a little bit better. Either one's okay. You can see it's not great right at this second. So okay, let's see if we have any other questions. Okay, so again, if you have any further questions, put them in the comments to this video, hit us up in Discord, etc. Also, as you kind of heard, I wanted to talk about this with lessons learned or trade ideas, but you can kind of see I'm starting to lean more towards what I would call a real BeachBum trading style, which is I find, and again, this is my opinion, so it's not financial advice, whatever. I'm not saying you should trade like I trade, but I'm finding that because I'm not as nimble as some of the younger traders, etc. But I think, my trade ideas, my trade picks seem to work out pretty good, at least for me, for us. So, and I'm finding if I just place the order at the price level that I would be happy with, then if they happen to spike it up, down, etc., to catch my order, then I don't have to worry quite as much about missing. And I probably should have done that on Friday, with all these shorts. I might have been able to catch some of these spikes if I just, put an order in at a good support level. And then if it spikes into it, it catches, great, because then if I'm off at the beach, I'm away from my desk, I get the orders that I want. So I've kind of done that recently with like a LABD, the ULE, etc. And I'm probably going to do more of that going forward. So what that means to you all is a lot of times, when I alert what price that I traded at, that may not be the best price. You may be able to get a much better price because I put it in at the price that at the time looked good. I'm happy with it. It may go lower. You might be able to get a better price when you get the alert. I'm going to put my stop in again, If I'm away from the desk, I'm going to put something I'm comfortable with that's relatively safe to protect our profits. That way, if I'm away and they spike it down, I collect my profit. Again, that doesn't mean you should necessarily do that. You may want to stay in the trade longer, get a wider stop, continue the ride up. I think cold, that was probably a good case of that. I probably got stopped out a little prematurely. Potentially might have been able to make more money if I had wider stops, but maybe not. I kept my risk relatively low. So I just thought I'd communicate that. So when you get the alerts, make your own decisions. You may be able to make more money with better pricing. So I hope that helps. So again, hit us up with questions in the comments, the Discord. Again, you can find an invite to the Discord. It's free to join in the description box below. Also links to all of our social media, the Discord, etc. All the tools we use, trading platforms are all on our webpage, beachbumtrading.com, bum without the U, under the links section. So again, you can find links to all of our tools, our social media sites, all our resources, etc. And if you'd like to see something there, just let us know. So we hope that all helps, and we hope you have a great trading week. And we look forward to seeing you in the Discord and chatting with you in our Discord. Have a great day. Bye.